What up, Hyperchange? Welcome to another episode. Today we're talking about Tesla's upcoming Q2 2019 earnings. This Wednesday after the market closed, Tesla is set to report its quarterly earnings. This is going to be a huge deal. Everyone in the financial media is waiting to see what Tesla reports. The company is guided for a small loss during the quarter. So in this episode, I wanted to go through what I'm expecting Tesla to report, how I got to those numbers, got a ton of charts and data and info lined up. So let's get right into it. The way I start analyzing Tesla is, of course, the quarterly vehicle deliveries. How many cars did they deliver in this quarter? So this Q2 2019, they released these official numbers from Tesla a couple weeks ago. So we have these to work with, which is awesome. It was a record quarter of 95,200 cars delivered. As you can see, just over time, huge growth in the amount of cars Tesla is selling. This is my favorite stat to just put into context the growth and execution and sort of overall success trajectory of the company. I think it's also worth noting that if we compare this to Q2 2018, you'll see they delivered about 41,000 cars. So they're going to increase deliveries, unit deliveries by 133% year over year. I know some people don't like the year over year comparison, and it is worth noting this year over year growth will slow starting in Q3 because the comp is so tough. But there's no other automaker on the planet that is the size of Tesla that is remotely growing this quickly. In fact, a lot of them are actually shrinking because of Tesla. This is just a testament to the amount of market share that Tesla is taking and how fast they're growing deliveries in an overall auto market that is relatively stagnant. But that's not what we're talking about today. We want to see how those deliveries translate into financials. So this is Tesla's quarterly financials, revenue and operating income, essentially revenue and profit over the past 10, 15 quarters. As you can see, Q3 and Q4 2018 were outstanding, $400 million in profit in each of those quarters on huge deliveries. Then in Q1, we had sort of a fallback to 4.5 billion with a loss of 500 million. And this to me was sort of basically a perfect storm of negative events for Tesla. The biggest thing that was happening in Q1, first of all, is just seasonality of the auto business. This is the slowest quarter in the automotive business. It's super cold in the winter, just less people are buying cars. So that's reason one why it looks a little bit weaker than the previous periods. And then on top of that seasonality, we had the tax credit halving, getting cut in half from $7,500 to $3,750. So that caused sort of pulled forward a bunch of demand into Q3 and Q4 that then wasn't there in Q1. Also, we had the start of international shipments and deliveries of the Model 3, which caused a huge headwind on profitability and cash flow because they actually had to ship these cars overseas. There was a delay in actually getting paid for the cars versus the parts. It's a different supply chain than US and North American deliveries. So that perfect storm of events, in short, was what led to that weak Q1 for Tesla. And I think now that we have back to record deliveries, they've sort of figured out international sales. The tax credit overhang isn't there. This was the first real quarter where we got to see Tesla's demand sort of carry through, and it was incredible, and I think this is going to translate into really solid financials as well. So the company technically is not guided for a profit. The official guidance from Tesla is for a small loss in Q2, but my model actually has them posting a positive operating income. It may result in slightly negative net loss, but positive GAAP operating income, revenue of 6.5 billion. It says 0.0 in profit, but my model is calculating 29 million. Let's go under the hood into Excel world so I can show you how I actually got these numbers. Maybe I should have said Google Docs world, but here we are. There's a quick little spreadsheet I made, Tesla Q2 2019 earnings estimate, just to go through sort of what I'm thinking, how I'm estimating. I mean, this is really sort of rough back of the napkin math, but just I think it is a healthy exercise to do to forecast revenue of the company. But of course, I could be totally off. Who knows? This is just my estimate. Anyway, it starts with the vehicles delivered. So as you can see, these are the unit deliveries that Tesla did. They guided about 17,000 Model S and X total. I just split that in half for Model S and X. Here are the Model 3 deliveries, 95,200 total, a record quarter for Tesla. And so this is how I have that translating into financials. Auto revenue about 1.6 billion, 1.1 billion in gross profit, a total gross margin of 18%. Also worth noting that these numbers here are for automotive revenue, automotive leasing, and services and other. Essentially every revenue line item that Tesla has other than energy, I lump into auto revenue so that if they're losing money on service or they're losing money on leasing, it sort of all bundles together and I can see the overall business. That's just how I like to do it. And then here we have energy revenue of 425 million, gross profit of 43 million, 10% gross margin, SG&A of about 700 million, R&D of 350, restructuring of 20 million, and then that gets me to that positive EBIT number of 29 million. But I want to walk through this in a little more detail. So let's just start with how I got to the revenue numbers. So moving to the automotive revenue tab, we can see that this is sort of how I think about how the amount of cars that Tesla delivers translates into the revenue they get. So as you can see, I made this little calculation of amount of revenue per car, which is really simply the amount of cars sold or the amount of revenue divided by the amount of cars sold. And as you can see, this has been coming down. And this includes service and other revenue. So that's why it's a lot larger than the average selling price that you might estimate. But as you can see, as the mix of Model 3s has gotten higher, then the revenue per car has gone down. But the mix is not actually changing that much from Q1 to Q2. So that's why I didn't drop the revenue per car estimate that much. And I also think it's worth noting that in Q1, Tesla introduced the $35,000 version of the Model 3, or the cheaper sort of base version, $38,000, $40,000 version. So I think that sort of dropped prices dramatically in Q1, but that effect isn't going to be there as much in Q2. I think the ASP average is going to stabilize. Then the other huge estimate that I put in is 18% gross margins. And I'm going to put a link to this model in the description of the video so you can download it, put in your own estimates here and see what it comes out with. So keep that in mind. But my estimate here is for 18% gross margin. And just taking a step back in a chart world, that's what it looks like. This is 17.5% there because that's including the energy gross margin. But this is what I have the overall GAAP gross margin of Tesla being. And to me, this is like the biggest X factor because it's so hard to estimate exactly what this will be. But this is going to determine whether Tesla makes money or not. So I have it bouncing back to about 17.5 overall GAAP gross margin. As you can see, that's lower than it has been in the past, but a big bounce up from Q1. And so there's a lot of speculation about how this is going to unfold. I mean, we have higher S and X deliveries with the Project Raven, manufacturing improvements with the Model 3, higher deliveries, economies of scale. So I think that should add up to a nice gross margin bump, but how much, who knows? But anyway, I'm putting 18% into my model. Now moving back to the summary page, that those estimates for the average revenue per car are going to spit out automotive revenue for me of about 6.1 billion. My gross profit of 18% shows 1.1 billion in gross profit for the car business. For the energy business, I put in the estimate of 425 million. You can see that this is what the energy revenue had looked like up until Q2. I had them doing a record quarter in Q2 2019, 425 million. I think this can be driven mainly by the battery business at a utility scale that's really doing well and growing. And the interesting part about Tesla's energy business, it's sort of been a tale of two different things because we have, the rapidly growing battery deployments. That Q1 spike that you're seeing right there is because the Australian project that was a huge, just mega battery installation in Q1 2018. That's why those numbers were so crazy, but steady growth overall in the battery deployment business. And Tesla's actually guided for this battery business to double in 2019 or more. So I think we're going to see continued growth here in battery deployments in terms of megawatt hours, but solar installations in terms of megawatts have been falling off a cliff since the acquisition of Solar City. This is partially because they've been switching to a sales model, cash sales model, instead of a leasing model, which helps the cash flow, which I think is really smart. So they're doing less of the low margin solar installations. That's why this is going down. Additionally, I just think they're focusing way less on solar, partially because they have so much on their plate with Model 3, but also until the solar roof really gets worked out and ready to scale, I don't think we're going to see this number go up. So the energy business is a mix of declining solar, increasing batteries. And so I'm estimating 425 million in revenue. We'll see how that pans out. The gross margin in this business has been really, really weak, only about 2% in Q1 2019, but I'm having that bounce back to about 10% in Q2, but we'll see what happens there. I mean, the point with Tesla's energy business is it's such a small piece of the pie. I mean, 425 million, 43 million in gross profit on my 10% estimate. As you can see, 43 million in gross profit is relative to 1.1 billion in gross profit for the car part of Tesla. So it's just much smaller. Here I have SG&A, sales, general, and administrative expenses. Essentially, basically everyone at Tesla that's not in R&D. I had this increasing to almost a record 740 million, assuming they're continuing to hire. R&D is fluctuating between 340 to 380 million. I have this at about 350 million. I don't know, kind of a guess there, but it's in line with what Tesla's been doing in the past. And then they've been doing a lot of restructuring, the layoffs. I think a little bit of that might continue into this quarter, so I estimated about 20 million. And then the 1.1 billion gross profit here, plus the 43 million gross profit here, minus all these expenses, and we get to a profit of 29 million. So I think this is the most important number in any financial model, or my understanding of the company, my proxy for profit, EBIT, operating income. And per my understanding, my model, this could be wrong, it could be off, but Tesla is going to be very, very close and looks like they will be profitable this quarter. And so they've guided to not be profitable, but I think that was on a net loss basis. So they still might, there's about 150 million in income expenses or interest expenses that go below this line item. So if you include that 150 million in interest expenses, they would have actually lost about 120 million. according to this estimate, but on an operating income level, they would have made about 29 million. And so I think this would be an amazing achievement for Tesla. I mean, the company, it has gone from losing hundreds of millions per quarter to now actually making a little bit of money, being about break even. I think this is a huge step forward for the business. And I think what's even more exciting is if you look at the TTM revenue and TTM gross profit trailing 12 months, I just wanted to highlight this because it basically adds up the previous 4 quarters of numbers. You can see the trailing 12-month revenue for Tesla is 25 billion. So right now Tesla is after Q2, if my estimates are right, is going to been a business that's done 25 billion in gross profit, 25 billion in revenue, 4.7 billion in gross profit, earnings of positive 339 million. So not only are they going to be profitable this quarter, but if you take the last year as a whole, Tesla's business is pretty lumpy. So I think this is actually a really good exercise. You'll see that Tesla is profitable to the tune of hundreds of millions of dollars. So this is huge. The business model is validated. Everybody's getting so, narrowly focused on deliveries, on production, on the latest, FUD headline, Tesla fire, that they're forgetting to look at that Tesla's core earnings power has never been stronger. The business has gone from losing a ton of money to scaling Model 3 production to now being profitable to having 25 billion plus in trailing revenue. I mean, this is incredible. And they're still growing like crazy. If you look at the average trailing 12-month revenue growth, it's 9.4%. And this is sequentially trailing 12-month gross profit growth, about 11%. These translate to about 40 to 50% annualized growth rates. So you could say the business, that you want to look at it another way, you could say the business on a TTM rolling basis is growing about 40 to 50%, which is also incredible and much faster than any other automaker. So that is my model. This is what it's spitting out: 6.518 billion in revenue and 29 million in EBIT. This could be totally wrong, but this is my best guess on what Tesla will report this quarter. If you have any guesses on what you think Tesla will do this quarter, any estimates, please leave them below. GAAP revenue and GAAP EBIT or operating income, leave it below. Would love to see who the closest is. It's always a fun game. If you want to check out more on Tesla's financials or data and how I got all this data myself to build this little model, you can go to hypercharts.co/Tesla, where they have all the financials. We're going to update that site the second the real numbers come out, so you're going to want to be following that for sure. Additionally, if you want to submit a question for the earnings call and ask Elon Musk and Tesla management a question, you can do that if you're a shareholder, or submit a question with Say. Say is doing the Q&A platform. This is what Tesla led the earnings call with the last 2 earnings calls. I've been working with Say to launch and build this platform so you can submit questions. Everybody gets a chance. There's already 119 retail shareholders who have submitted questions with 11 million worth of shares. I'm still thinking about whether I want to submit a question and what I would want to ask, because frankly, a lot of my questions about Tesla have been answered over the past 6 months to a year. The company's really done a tremendous job of switching its focus to less quarterly numbers and more talking about its technology with the Autopilot Investor Day, with what they're about to announce with the battery train and powertrain Investor Day. So I think I'm sort of waiting for those. So high level thoughts on this quarter is Tesla, through all the noise and everything, is on the cusp of reporting either not a profitable quarter or very, very close to a profitable quarter. And if you look at the last 12 months since they've really ramped Model 3 production, you can see that it's very, very likely they'll be profitable on an operating income basis. I mean, this is huge. I mean, the Tesla's as their cash position has never been stronger as well. Not only are they closer than ever to making money, but the company had about $2 billion in cash as of its last quarter on its balance sheet. They just raised another $2 billion during the quarter, so they should have about $4.4 billion on the balance sheet, and then the rest comes down to free cash flow. This is the other chart I'm going to be watching super, super closely when they report their numbers, which is going to be, are they going to be positive on a free cash flow basis, operating cash flow minus CAPEX? As you can see, 2 huge quarters in terms of cash flow in Q3 and Q4. Then they lost, equivalent about 900 million amount in Q1. But I think this is actually have the opportunity to be positive or break even or very close to break even going forward, which once again means the same thing. Not only from an earnings basis will Tesla be profitable for the last 4 quarters, but from a cash flow basis, they will be as well. So that's what I'm looking for when Tesla reports its earnings next week. Cannot wait. Happy Tesla earnings week in advance. Of course, I'm going to be covering all of this on Hyperchange. The second the earnings come out, I'm going to be making an episode and putting it out as soon as I can. So make sure to subscribe to the channel if you haven't already. I might be going on some news programs later on the week to talk about Tesla. So I'm going to be tweeting about those as well. Anyway, this is Hyperchange. Don't forget to put your estimate for Tesla's earnings below. And huge shout out to all of our Patreon supporters, producers, fun in the channel. Anyway, I'll see you guys next time. Peace.